Hey, what's going on, everyone? The SPY broke support. So in today's video, we're going to go over what the next steps are for the SPY, where we can potentially fall now that we've broken important levels of support, and just the overall outlook for the entire stock market as well as the crypto market. Thank you so much for liking, following, and subscribing. Let's get started with the video. So I'd like to start this video by sharing what I said in the previous video. So we are oversold. The RSI not going lower is not a bullish sign. We want the RSI to go lower in unison with the MACD, right? But the fact that the RSI didn't go lower means that there's still potential downside momentum still remaining, okay? So we have to keep that in mind on the IWM. And if the IWM starts puking, then the SPY and the NASDAQ can potentially start, going down lower as well. So we just have to continue monitoring how that. Yeah, so that worked out as planned. So as we can see here, the IWM did indeed fall much lower. The RSI, remember, being flat was not a good sign, and it did end up breaking lower as well. And the MACD became even more oversold. So what needs to now happen on the IWM is we need to see whether or not we can hold the 50% Fibonacci level at 220.87, right? And then we need to see if we can hold this trend line here. So tomorrow, the key level of support on the IWM is going to be approximately, let me erase my artwork. It's going to be approximately 220.30. So that is going to be a very important uptrend trend line, and if we break down from that, then we can very likely touch 218.11. So just be aware that if the IWM starts to break down below 220, then just be careful for it to touch 218 as well. So that was the analysis for the IWM. Let's go ahead and check out how the SPY can now turn out and where it can potentially go. So remember, we had a Fibonacci level to this old all-time high to 447.11, right? And that was a very important level of support. And as you can see, we really broke that level definitively, right? So now what we have to do is move this Fibonacci level to the new all-time high, and now we have an updated Fibonacci retracement zones. Okay, so as you can see, the 23.6% fib level is at 444.76, right? So now if the SPY breaks 444.76, the next most important level of support is going to be 442.66. Okay, the reason for this is, as you can see, it was acting as very clear support for weeks, right? So we can see that it had a low of right here, 442.87, 442.66, 442.62. It opened at 442.61, a high of 442.80, a high of 442.94. So this has been a very congested area of resistance and support both. So now, because there was so much price action there in the past, this is going to be a very clear level of support moving forward, right? So once again, we need to see how we respond at these levels here. The SPY's MACD is actually very similar to where it was back in August 20th and 19th when it did make its lows and fell, right? It could fall lower. The MACD could fall lower to where it fell in July 20th, but we need to see how if it does fall that lower, then potentially the SPY is going to end up falling to like 440 or lower to catch up to where the MACD is currently. But we need to see how we can hold above 442.66. Then the clear level of support is going to be this 38.2% Fibonacci level at 439.02. So in a correctionary mode, especially when looking at the past, the SPY does
tend to retrace back to the 38.2% Fibonacci level, right? So we need to see, you know, if you just look back every single time, essentially, the SPY has made intermediary lows and highs. Those lows have fallen to at least the 23.6% fib level of each move, as well as the 38.2% fib level of each move, right? So the odds are much heavier that we will fall below 440. Okay, so I would be wary going into the beginning of next week. I would just be careful. I would only start to scale into calls and long positions, because I would just wait, because it doesn't look like we will find support unless we do. I could be completely wrong, but it looks like the momentum is going lower. So, I mean, we just have to wait and see. But the odds are that we will fall down to the 38.2% fib level. There. Cool. So now I want to show you guys something interesting on the NASDAQ. Okay, so as you can see, if you remember, the Fibonacci level on the SPY, right, was at 447, 447.11, right? So it was on the high of August 16th. Okay, so this is where this zero level essentially was, right? And you can see now that the SPY has reclaimed that high and it fell lower, right? So let me just fix that. And you can see on the NASDAQ, I didn't actually update the fib level, right? So this is the same. So on August 16th, we were actually lower, right? Whereas on the SPY, we made a new all-time high on this day. But on the NASDAQ, you can see that it's still trading below its all-time high, right? Take this out. So you can see that we still have not yet come and retested this prior all-time high that the SPY broke below. Okay, so you can see that there's clear strength in the NASDAQ, right? So now, you know, because we, you know, still should update the Fibonacci level, I just wanted to show you guys how the similarity between where the price was for the SPY and the NASDAQ, and it's just interesting to see that we have not yet come and retested that level yet. Because the NASDAQ is just so strong and it barely ever really retraces compared to what the SPY and the IWM do, we're going to draw shorter term Fibonacci levels on the NASDAQ to see where we stand currently, right? So we're going to go ahead and take this low here from August 19th to the most recent all-time high, and we can see that the NASDAQ broke down below its 23.6% fib level on the, you know, shorter term Fibonacci zones, right? And the next level of support, the most important level of support currently shorter term for the NASDAQ, is going to be at the 38.2% fib level at 374. So 374 is now going to be a very, very important level of support. You can see that it's acted as support and resistance very, very clearly prior over here, over here. And yeah, so we need to see how we respond at that level here. All right, if 374 breaks, then the low 370s and, you know, eventually the prior all-time highs is going to be a very strong possibility. But 374, I do think that we will potentially hold that level, because if we break down below it, then it can mean that the SPY and the IWM will break down, you know, even further, and the SPY would essentially end up breaking down to the high 430s, and then the IWM would end up breaking down to the 213, 215 level once more. So I don't think the NASDAQ is going to fall that low. I do think it should hold 371 to 374 area as support, because anything lower than that would be very, very bearish for the SPY and the IWM. But of course, I mean, things can happen in the market, so I could be completely wrong, but that's my view. Yeah, so we just have to monitor how things play out, regardless of how we feel about them. And another good indicator of where the indices will go is if we look at the dollar as well as the 30 and 10-year yields. So let's go ahead and go do that right now. So here's the dollar. You can see that the dollar made a strong move, gave back all of its gains, and is now bouncing out of extremely oversold position. Okay, so now it's failing to cross above the 20 exponential moving average, which is acting as clear level of resistance, and the MACD has already crossed above and is now overbought on the dollar. So that is not a good sign. It would be much more bullish if the MACD was still oversold and we were still oversold at resistance. But the fact that we've basically broken all of this momentum, but we still could not break above resistance, is not a very good sign for the dollar. So we need to see what happens next. And basically, if the dollar and the 10-year yield are doing well in unison, then the IWM will be bullish. But if the dollar and the 30-year yield are bullish, then the NASDAQ will be bullish. So we need to see if that relationship is going to continue moving forward, given that the indices are falling sharply, right? So let's go ahead and now take a look at the 30-year yield to see the relationship of what might happen for the NASDAQ in the future. So as you can see, the 30-year yield looks much worse than the dollar. The dollar at least came and touched the 20 exponential moving average, but the 30-year yield failed to do so. They both bounced out of extreme oversold conditions. And the one difference is that the 30-year yield has not crossed bullish crossover on the MACD yet, so there is still potential room to the upside. Okay, but we would need to really start moving, and these levels would need to hold as support if we want to break above the 164 level on the 30-year yield. But here's the thing: if we start falling sharply, right, and if these levels don't hold, and if the MACD crosses above, right, and if the blue line crosses above, right, but the 30-year yield is still trading somewhere here below this 20 exponential moving average, that is not a good sign. That is very, very bearish, and that is not a good sign essentially for what might end up happening for the NASDAQ, right? Because if we used all of our upward momentum and failed to cross above resistance, that is a very good signal for people to want to go short, right? So because that is such a high quality trade for people to go short, essentially at resistance, as it failed to break above, right? Then there is a big possibility that we would end up breaking these prior levels of support and then go back and retest the 161 area. If we break this prior support level, right, that we were extremely oversold at, and make new lows, then that is not going to be good for the NASDAQ whatsoever. And that really won't be very good for the overall market. So we need to see how we respond now, because this is not the most bullish setup at all for the 30-year yield. So taking a look at the 10-year yield, the MACD is actually bearish, but the price of the 10-year yield bounced, and you can see that it's still holding above its uptrend, and things look potentially bullish, right? But this is one of the discrepancies that we need to watch for, because this is generally supposed to be a bearish move as the blue line crosses below the yellow to the downside, right? But the fact that we bounced up, is extremely bullish, but it's not basically showing in the equity price because the IWM fell the heaviest, right? So what we need to look at is zoom out a bit further and look at what is going on with the MACD. You can see that there is clear negative divergence, right? So negative divergence is when the RSI or the MACD is falling, right? So as you can see, it's falling lower, right? Wow. But the price of the 10-year yield is increasing. So as you can see, this is increasing, but the MACD is decreasing. So this is negative divergence. So essentially, we need to see whether or not this entire setup is going to continue moving on upward. But it looks like today the price of the equities did not match according to what happened with the bond price. So we need to see, we just need to continue monitoring what that means and whether this negative divergence is relevant currently. Because what could end up happening is we could just bounce completely on higher now and break this negative divergence. And that would be extremely bullish. And yeah, we just need to see. I mean, we just really need to monitor this. Aside from that, that should be all for the equities market and the stock market. Now let's go ahead and take a look at Bitcoin and Ethereum. So here's a chart of Bitcoin. And as you know, that I said that whenever there is a big wick to the downside, we have a very high likelihood that we would go and retest the 78% level of that wick. All right. So what ended up happening is we broke the 618% level and broke down a bit lower to almost the 786% level here. So I did some quick math and I got the 70% level of this wick, right? So this wick at the 70% level would be 44,090. And I said that usually what ends up happening is we go back and retest that 70% level, right? So 44,090 was that 70% level. And on September 10th, we went to a low of 44,125. So that is essentially $35 away from the level that I said we would potentially touch. We didn't technically touch it, but that was very, very close. So we need to see how Bitcoin now responds. So let me go ahead and cancel this. All right, we're back. So it looks like Bitcoin is trying to bounce, right? We can see that the MACD is extremely oversold. The RSI is now starting to move up forward. We can see that there's some sort of a triangle pattern being formed here, which is fine, right? But now, you know, we need to see today and tomorrow are going to be very, very important. Tomorrow especially, because this is essentially where the triangle begins to close, right? So are we either going to break upward or are we going to break downward? So until we really see a definitive movement, right, it doesn't make sense to try to trade it. You know, unless we break above levels of resistance or we break down below levels of support. So these are going to be the same levels here, right? For the candle itself, right? But if you zoom out a bit, the most important level of support and resistance for Bitcoin, especially in the 45,000 range, is going to be this level here at 45,000, essentially 96, right? So currently we're trading above 45,696, right? So you could just remain long above that level and create a stop loss either here or down here, right? Or if we fall down below that level, you short and then again create stop losses up here or up here, right? So it's really dependent on how you want to go ahead and trade this. The technical indicators look, I mean, you can't really tell too much about this, but the RSI moving upward is a potentially good sign. But this is a huge move downward, all right? So, I mean, if we fall and break down from here, this would be very, very bearish. Because usually what happens is when we do fall very sharply in a short amount of time, we do tend to really, you know, bounce back to at least the 50% or, you know, at least the 38.2% fib level to the upside, right? So it doesn't look like we've retested the 50% level, right? So the odds are more in the favor of it being long and a good opportunity to buy, even though things look very, very bearish. But of course, you know, if we do fall, then the low 43,000 level is going to be very important as support. And of course, the upper, you know, 47,200 level is going to be very important for resistance. So that is really it for Bitcoin. So here's Ethereum, very similar triangle being formed here on Ethereum. And ooh. All right. But yeah, so that is the triangle on both Ethereum and Bitcoin. So now today and tomorrow we're going to be very important on Ethereum as well. Ethereum is also extremely oversold on the MACD. The RSI is moving upward as well. And it doesn't look like we've retested the 50% level of this drop yet. So that would put us Actually, we did. So we did retest the 50% level of the drop. We broke above 34.82, and now it looks like, you know, if we do break above this level, then this is going to be the next really important level of resistance, and this is going to be a really key determining factor of whether or not we broke this bear flag. Because if a stock, so in a bear flag, right? Bear flags are very bearish patterns, and this is technically a bear flag, right? Bear flags become invalidated if the stock can break above the 618% level, and it very, very highly becomes extremely invalidated once it breaks the 786 level. So if we can close and start showing strength above 35.92, that is going to essentially probably be 70 to 80% chance that we will continue going on higher. But once we start breaking above the 786 level, that makes the odds of it happening so much more higher. But yeah, so those are going to be, you know, the very, very important levels of resistance now on Ethereum. And if Ethereum does lead Bitcoin, we need to continue monitoring how it responds, right? So there's my analysis for the stock market and the crypto market. I hope you guys enjoyed, and I will see you guys tomorrow. Thank you.